everyone, this is Abhijit Chatterjee recording our weekly session for Chartsarefun. This is for the week of May 19th, recording this on Saturday morning, May 24th. An interesting week where the market, as we know, has come up a lot, 23% in both S&P and small cap IWM since the April 7th low. And we had a little bit of a pullback this week. The Nasdaq has even done better, up 30%. So a couple of events happened this week. One was on Treasury. There was about 16 billion of 20-year treasuries that were auctioned, and it didn't go so well. There was tepid kind of reaction to it. We know that last week, end of last week, Moody's downgraded the US's credit rating from AAA to A plus or A1, and that kind of had a bit of negative sentiment on treasuries. So the auction didn't go so well. And then on Friday morning, we got President Trump talk about putting the ante against Europe, saying they were too slow in making tariff deals, and he temporarily has now increased tariffs to 50% starting June 1st. It's probably his negotiation tactic, but it did, kind of took the market down. Volatility climbed on Friday. And he also put his ante against Apple, saying that Tim Cook had promised to bring manufacturing to US. If the iPhones are not going to be manufactured in the US and manufactured in India instead, and they would have to pay 25% tariffs. So he slapped that on Apple as well. So market took it in stride. We did get a pullback, but we'll look at the charts. So we will start off with Tom Lee's thoughts on the market. We know that he's been overall very bullish. He made four points regarding why he sees S&P to climb back to new highs in the very near future. We look at Bitcoin. We know that Bitcoin this week broke out above the January highs at 109,000. It touched 112,000. So you look at the Bitcoin chart. We will look at gold. We know that there are many out there who are gold bugs, who are huge fans of precious metal gold, thinking that that's the place to be in. We disagree. We think gold is kind of hit a major top and is going to be downward headed in the next several months. So the 3,500 likely was the top for the year that we saw in April, and we feel that there's more downside for gold. So we will look at the chart of gold. We will also look at the long-term treasury ETF TLT that measures the 20-year treasury ETF. So we look at TLT. And then we had the last couple of weeks talked about why we felt that there was a market correction coming and why we felt that there was potentially a volatility move happening. And we did get that. VIX shot up from near 17, 18 up to 25. We'll show you an interesting pattern we've shared in the past, which is the bullish percent index on the S&P 500. We'll show a chart of that, and we'll show how the MACD crossovers of that, the bearish MACD crossovers of that correlates with the VIX spike. So we'll show that. And then we will show the S&P 500 chart. We'll talk about why we feel there's more upside. We'll look at a key indicator in there called the summation index. We'll show you that. And then we will end with small caps and most importantly, NVIDIA's, knowing that they're coming up to earnings the coming week on the 28th on Wednesday. So with that, let's just jump into our blog site. It's chartsarefun.substack.com. We publish blogs every time it comes out at 7 a.m. If you share your email, you'll get a copy of the blog. And this is the archive site showing you the last few days of blogs that we've published. Our website on YouTube or our channel is Chartsarefun. We appreciate you subscribing to the channel. And if you like the videos, if you could hit the like button. So we said we will go straight into Tom Lee's thoughts. There were four key points. This is a recent recording that he made about why he feels that the S&P 500 is likely approaching all-time highs. This first point that he made was Bitcoin. Bitcoin has taken off its January high and crossed above it. And Bitcoin is a leading indicator. We know that Bitcoin topped in January when S&P topped in February. So it's about a month or so that it leads. So the fact that the Bitcoin has taken out its January top and tested 112 this week, it means S&P is headed for its taking out its 61.47 top from February in the next few weeks, maybe sometime in the middle of June or so. So he sees that as a positive sign that Bitcoin was able to take out its January high. The next key thing he's talking about here is if you look at the worldwide fund manager, there was a survey done. They are most underweight on US equities. They are by far the most bullish on Eurozone. These are international fund managers. So they're by far most bullish on Eurozone. Cash, of course, because yields fetch a good amount of interest and dividends. Healthcare, in fact, that's a classic bearish positioning or classic, um, defensive posture is where you can see healthcare is number three. And in the bottom, you see energy is right above the US, but those are areas that global fund managers are extremely bearish about. The next key point Tom Lee makes about is the hedge funds are from the short part of their portfolio, how much they have kind of added shorts is at the highest level over the last couple of years. So that also is not a great, like it's a contrarian sign. It means that they are too leaning on the bearish sentiment, which means the market usually could go the other way. And finally, so he talks about the international fund manager positioning. He talks about the hedge funds. Right here, you can see that they are the most extreme. So that's one of the most hated rally because of the largest increase in hedge fund short positioning. And then finally, he makes a point about VIX. When VIX, climbs above 50 and then from there settles down below 30, so spike up to 50 and comes back and settles down, it's often a bullish indication of upside coming in stock market, which is where we are. We had hit 60 in the early April timeframe, and from there, that was in fact April 7th, we hit 60, and from where now we had like in the 17 region we were recently, and that's an indication that volatility crushed lower means there is upside in stocks. So now let's look at the Bitcoin chart. We see that it has broken above the January high at 109,000 to 112. We see that, of course, on Friday after President Trump's Europe warning with their tariffs and Apple's warning, it did take a dump from 112. It came down to 107. It's now kind of consolidating. We do believe that what we see on the December to January timeframe movement from 108, 109 to the 91, 90,000, we believe something like that could be what the Bitcoin could be tracing. That's like if you talk about an inverse head and shoulder with a neckline in that 109, 112 slanted neckline, that left shoulder move from 109 to 90,000 is perhaps what we trace out. We come back and test we can see that there's a bullish cross of the 50-day above the 200. This is also called the golden cross. They're both rising, which is bullish. When you have a golden cross and both moving averages rise, that's a bullish sign. So you see that it has now had a golden cross recently, which means it's bullish for the Bitcoin moving forward. But potentially we do expect perhaps a pullback to test that 50 and the 200 in the low 90s. 93, 94 is where it's right now. And then from there, after the right shoulder is formed, the breakout. So if that happens, it would be a tremendous buying opportunity, whether it's the Bitcoin ETFs, the Grayscale GBTC or Fidelity's FBTC or the IBIT. Any of those are really good considerations to buy from a Bitcoin investment, or you could, for the aggressive traders, look at double X leveraged Bitcoin ETF called BITX that also pays monthly dividend. So that's the pullback we're expecting, and after that we expect the breakout taking us towards the 150,000 in Bitcoin. So that's the Bitcoin chart. We can see the MACD here also kind of curving, the MACD histogram curving to lower highs, which and we can see that it's in the poised of about to break lower. So that indicates that there is potentially some bearish move or some form of a pullback setting up in Bitcoin over the next few weeks, and that's a possibility. Gold, we can see, is coming down after its peak. This is GLD. We know the spot gold hit 3,500 in the April peak. So GLD peaked at 317. We can from there see a declining channel, and it's coming down the channel and recently came up to test the channel's declining trend line on the top at 310. So that was a lower high, lower low, and we believe that gold is poised to break below the 290 level and go test the 272 level. We can see that the 272 was the peak in February, and then it was the bottom in March or in April. So that kind of now becomes key support. 272 is where we think gold is headed. So we would not be buying or holding gold here. We believe that we'd rather wait to see this pullback, and we believe that Bitcoin is rather going to be more, bullishly poised versus the gold and outperform gold in the next few months. So that's gold. And then let's look at the long-term treasury yield ETF called TLT. This is the 20-year treasury ETF. We can see in this particular case potential double bottom forming. The 83.71 was the January low. There was a cap left at 84. We since there had gone up to 93.75, and in the last couple of months have pulled back, and finally that gap at 84 was closed on after the a poor auction on the 20-year treasury. So now that gap is closed. It touched a lower low from the 83.71 at 83.29. But technically, whenever you retest lows with a higher low on the RSI and a higher low on the MACD, we call that positive divergence. We call that as a very bullish sign, and we believe that we potentially have formed a double bottom in TLT, which means we expect TLT to now start climbing back up towards that 93, 94 level and potentially break above it. So from 83 to a 93, that's a $10. Breaking above that would measure to 103. We feel that TLT is poised to reverse higher, which means the yields come down. And the yields coming down, the long-term yields in particular, which means the 10-year yield, is currently at the 4.5. We expect it to come back towards the 4 level and potentially break below the 4 level. If we want to now look at the key pattern in the S&P 500's bullish percent, this is based on point and figure charts. What percent of S&P 500, we know there are 500 stocks in that index, have bullishly aligned point and figure charts. It had gone high from a low of 10% to 76% last week, and from there started coming down. And when you have these, as the BP goes from the lower to the upper and comes down, and you have the MACD histogram dip below the zero center line and go to the negative region, we have drawn those as these rectangle annotated boxes. Every time we see that there's a bearish crossover of the MACD histogram, the lowest panel shows you VIX or volatility. You can see that it spikes. We recently got that, and look, like yesterday or last couple of days, VIX has spiked from near the 17s to touching even 25, closing at 22, but it intraday touched 25 yesterday. Same thing in the December timeframe. We can see that the bullish percent MACD had a bearish cross. We see volatility climbed. Then in October, early October, the MACD crossed below the zero center line. We got a volatility climb, and then we know during the Japanese stock crash on August 5th, that's when again BP came down, and we saw that the VIX kind of went higher. So that's an indicator, and we often use that as an indicator to be careful in the market. And that's what we had cautioned last week, that perhaps it might be a good idea to buy volatility ETNs like UVXY or VIXY and so on. And for those that did do that, it was a good trade that worked out very well. And volatility did climb as the bullish percent index MACD had a bearish cross. Now, looking at the S&P 500, we can see that from the 48.35 to 59.68 move that it had in the span of 6 weeks or so, that's a 23.4% climb. So 23.4% in the span of 6 weeks. Of course, very stretched. RSI had briefly touched 70. MACD had kind of stretched out a bit. And then we got that pullback. But look at the beautiful test of that 200-day moving average at 57.73. The low on Friday was 57.67, reversed higher and closed above that key level of 5800. That's so far looking quite a bullish pullback. a small correction that we got from 59.68 to the 57.67 level. That's about 200 points. And now a potential possibility, the bulls would look for a reversal higher, break above 59.68 and go back and test that February high at 61.47. Looking at what Bitcoin did, which is it took out its January high, we feel that's a leading indicator that the S&P 500 is going to do the same. So while we know that there is a gap here right below 5,700 around the 5670 or so level, that gap may not close at this point. There's a possibility we have tested the 200-day successfully. We can see that the 50-day moving average is now flattening and getting aligned to start climbing, and so is the 200 is about to start climbing with bullishly aligned 250, both looking to climb. We might have just basically got that pullback, the test of the 200, and from there potentially next week we know there's NVDA earnings, and any other bullish news could effectively give S&P a momentum to climb back to above the 59.68 towards the 6100s. We'll see. That's something that we have to watch. Now, the other key indicator from an intermediate term trend on S&P is the summation index. This is a weekly chart. So every candle here is a week of summation index values. We know that after 5 successive weeks of climb, this week we got a pullback in the summation index. But look at the pattern of summation index over the last 3 years. We are seeing a pattern of higher lows. That October 2022 bottom was 1138, minus 1138, then a minus 834, and the recent low on April 7th was minus 590. So that pattern of higher lows indicates that the summation index is inclined to go back and test that upper end, which is near the 1100 level. So we think till summation index climbs to the 1100, there's more upside in the S&P, and we notice that whenever they do climb, they tend to climb over a span of 2 to 3 months. So we are in the midst of that, halfway through it. For the next 6 weeks till like sometime in the July timeframe, there's a good possibility S&P could keep climbing and the summation index could come and reach the 1100. So till it gets there, we believe the market has more upside, and so we are bullish on S&P 500. Coming to the small cap ETF, the Russell 2000 ETF IWM, this has a 22.8 or a little about 23% move as well from 171 to 210. It tested a beautiful neckline of an inverse head and shoulder, you could call it. The left shoulder here is 196 to 209, pull back to 171 to form the head, back to 210. That pullback that we got, this potentially closed, could be the right shoulder forming, and then a break higher will measure to a higher high from the November high at 243 to 248. The 248 measurement comes from the 171 to the 210. So that's roughly, you're talking about 309 points or 308 points. 38 points, 171 to 210, about 38 points. Add the 38 to 210 is where you get the 248. That's where the 248 number comes from. Now, the gap here from the early part of May did get closed. That was about the 202 level. It did get closed. It had tested just below 200 at 199, reversed higher, and closed towards the upper end of the day at 202. So that's bullish. It was a bullish candle in terms of not as much volume in terms of selling that happened. And potentially this is setting up as a bullish inverse head and shoulder breakout. Worst case, there might be a little more pullback in the next week or so to test that 196 level. But we believe that 196 should now act as very strong support. The small cap ETF IWM will hold it. You can also see that the 50 days at 197. So it could, at the worst case, come down a little more to test the 197 and from there break higher. And this is setting up as an excellent buying opportunity. So IWM could be the ETF to invest in small caps. But for the aggressive traders, the XXX leveraged small cap ETF is TNA. And TNA could be the way to invest on small caps on the breakout that we expect. Finally, we talked about NVIDIA. Their earnings is on the May 28th after the market closes on Wednesday. And we can see that this has a very bullish breakout from 86 to 115. That's where it spiked higher at 115, pulled back to a higher low at 95, and then broke higher in terms of an ascending triangle pattern. So if we take 86 to 115, that's roughly 29 points. Add that to 115, you're somewhere around the 143, 144. So that's where we think the NVDA is headed. We did touch 137 intraday this week and then pull back, close near the 131, but there's a good chance Nvidia's momentum is strong. Very, very bullish news out there from the Saudi Arabia when President Trump was there. Big announcements of data center, AI data center build out there. And then this week there was a very bullish news of Oracle buying out the chips for the Stargate, this big Stargate AI data center in Abilene, Texas. They ordered 40 billion of GPUs, the latest Blackwell's 200 series of GPUs to be ordered for that data center to be built out by summer of 2026. So that's all bullish news. We know that the capex spending of the hyperscalers continues to be strong on AI, whether it's Google, Meta, Microsoft, they're all spending quite actively, and so is Amazon on the GPUs. So we can expect NVIDIA to test that 143 with earnings next week, and potentially from there maybe do a little bit of consolidation and break higher. So overall, to sum it up, we feel that Bitcoin breaking above its January high from 109 to 112 could be consolidating a bit, but that has a lot more upside to 150K. This being a leading indicator, Bitcoin broke out. We expect S&P to do the same. We feel that S&P is going to take out 59.68 and go test its February high and likely take that out above 61.47. And then we feel that the long-term treasury yields will come down, and the ETF for the long-term treasury yield called TLT is likely forming a double bottom. 83 was a very good entry point, it to break above 93 and go towards the 100 level. So we are very bullish on the long-term treasuries. And small caps are attractive. They're extremely attractive for an inverse head and shoulder breakout, breaking above 210, the IWM headed to 248. And then finally looking forward to a very bullish NVIDIA earnings coming up on Wednesday, and potentially if we do get any pullback, it would be a great buying opportunity. We see a lot more upside in NVIDIA setting up for the rest of this year. With that, good luck investing. We'll talk to you next week. Thank you.